Okay, hello and welcome back to the Broken Business Models podcast. We're your hosts, Ryan and James. And before we get into today's podcast, just a quick disclaimer, nothing that we mention in this podcast should be taken as investment advice. James and I could have positions in any of the stocks that we mention in this podcast, and we reserve the right to change those positions at any time with or without notice. So just make sure you do your own work and consult with a professional before making any investment decision. With that being said, the topic of today's video is going to be MicroStrategy. So we've talked about MicroStrategy before on this podcast, but recently there's been a couple of things happening adjacent to MicroStrategy, kind of other companies doing similar things as MicroStrategy that is very interesting. And so we're going to take a look at that in this podcast. But for those of you who aren't as caught up on the story, I'll just do a quick recap of what we've said in the past about the company. So MicroStrategy is a software business that holds a lot of Bitcoin. So the reason that we are negative on MicroStrategy is kind of threefold. One, the software business, which used to be kind of their core business as, what the business of the company overall. But so that software business has kind of collapsed over the past few years. Based on the value of the Bitcoin that they hold, the company seems to be extremely overvalued versus the value of the Bitcoin. And the other bull theses that Michael Saylor, the CEO of MicroStrategy, might peddle on social and traditional media, none of those bull theses are very compelling at all. So to the first point, the software business behind MicroStrategy is deteriorating. So MicroStrategy operates a kind of data and analytics software business that does about roughly $100 million of revenue per quarter. In the past year, their revenue has declined by about 10% from $120 million to about $111 million in the most recent quarter. But their operating income, so excluding the impact of the change in value of their Bitcoin holdings, their operating income has decreased substantially from a $2.5 million loss a year ago to about a $20 million loss in the most recent quarter. So their software business is deteriorating and no longer profitable. And even if it was profitable, the scale of the business, about $100 million of revenue per quarter, is nowhere near the market cap of the company. So there's really no way to spin their software business as a bull point for the value of MicroStrategy. But everyone knows that the reason that anyone buys MicroStrategy is not because of the software business, but because of the Bitcoin that they hold. Okay, so let's take a look at the Bitcoin that they hold and try to value it there. Currently, at the last time I checked, based on the most recent price of Bitcoin, the value of their Bitcoin was about $14 billion. They also have some net debt on top of that. But based on their current market cap and the value of their Bitcoin, MicroStrategy costs about $130,000 per Bitcoin held. So based on the current price of Bitcoin of roughly $65,000 per Bitcoin, MicroStrategy is trading at over 100% premium to Bitcoin. So there's really no way to make an argument that buying MicroStrategy is better than just buying spot Bitcoin itself. Now, MicroStrategy would have you believe a few other things that would be in favor of owning MicroStrategy stock. Historically, one of the main selling points was that if you are not able to buy Bitcoin directly yourself, maybe you only have access to publicly traded securities, then buying MicroStrategy was a way to gain access to exposure to Bitcoin without buying the spot Bitcoin directly. However, that's no longer the case because now we have Bitcoin ETFs that have very, very low expense ratios. So there's really no advantage to buying Bitcoin through MicroStrategy versus just the ETFs when it comes to having a publicly traded vehicle to buying exposure to Bitcoin. One of the other points that Michael Saylor has said is that buying MicroStrategy gives you a good way to get increased volatility as compared to Bitcoin, which it is true that MicroStrategy is significantly more volatile even than Bitcoin. But for long-term investors, volatility is not really something that you're trying to go after. And a third selling point is that MicroStrategy has the ability to issue equity and very, very low interest rate, about like 1% interest rate convertible notes. So very, very cheap debt to buy more Bitcoin. However, when they do this, it also dilutes existing shareholders by increasing kind of the denominator. If you think about the amount of Bitcoin per share, MicroStrategy is increasing the amount of Bitcoin that it holds, but it's also increasing the number of shares that it's divided across. So those are the main reasons that we have been negative on MicroStrategy in the past. So I'll go ahead and kick it over to you, James, to talk about some of the other things that have been happening in the market around MicroStrategy.
Yeah, so before I get into that, just a quick pause to talk about our website, differentiatedanalytics.com. So for anyone who doesn't already know, we have this website where we publish our proprietary short selling research, where we identify what we think are the most compelling short selling opportunities. We focus on companies that we believe to be overvalued or operating unviable business models. And we write detailed professional grade short selling research reports and publish them on our website, available to our premium subscribers. So if that at all sounds interesting to you, make sure to check out differentiatedanalytics.com. The link for that is in the description below. And so now back to the topic at hand. So as Ryan was discussing earlier, we're looking at MicroStrategy. Now, we went over a similar calculation in our previous MicroStrategy video, which we released a few months ago. That is linked in the description below. But since then, a couple of things have changed. So we've redone the calculation to calculate the premium to a net asset value. And it's important to say that the premium to net asset value, this changes every day or continuously, just based on the change in MicroStrategy's share price, as well as the change in the Bitcoin price. So at any given time that you're watching this video, these numbers are almost certainly out of date, because this MicroStrategy stock price is changing all the time. So this is just giving you a conceptual framework of how to calculate the NAV, so you can do this on your own in the future. So we have to look at, as of the end of the most recent quarter, so as of the end of the second quarter, MicroStrategy had $67 million worth of cash. And they also have 261 million Class A shares outstanding, and about 20 million Class B shares outstanding. And then you have to subtract the 86 million shares of treasury stock that they have. So those are the shares outstanding that MicroStrategy has currently. However, we also have to look at their convertible notes. And the convertible notes are bonds that can convert into stock based on a current strike price. And if we look at, as of the time of recording this video, MicroStrategy's share price is $150 per share. They have two convertible notes that are currently in the money. They have the 2027 convertible note, which is in the money because the strike price is $143. And then we have the 2030 convertible notes, which is just barely in the money. So because these notes don't expire yet, the holders of these convertible notes have not yet decided to, I don't think they're able yet to convert them, but because they are in the money, the expectation is, if MicroStrategy's share price stays at the same level by the time of expiry, these convertible notes will indeed be exercised, and MicroStrategy will have to issue new shares. So based on the conversion of these two notes, that would be an additional 12.7 million shares that MicroStrategy will have to issue. So if we add that to their current share count, we get a grand total of 207 million shares. And there's also $1.9 billion of debt that MicroStrategy has on its balance sheet. This includes their regular non-convertible bonds, as well as some other convertible bonds that are out of the money. So if we add, the share price multiplied by the number of shares outstanding, that gets us to about $31 billion. And then we also have to add the $1.9 billion of debt. So that brings the enterprise value up to a grand total of $33 billion. And then they have the software business. As Ryan explained earlier, the software business is run rating about $400 million, maybe a little more than $400 million per year of revenue, and it's losing money. Given that the software business is losing money, a $1.5 billion valuation for the software business is, if anything, probably generous. But if we subtract that from the enterprise value, we get the enterprise value minus the software business, which should be what the value of, and that we use that to compare to the value of Bitcoins that MicroStrategy holds. They currently own 226,500 Bitcoin. If we divide those two numbers, the enterprise value per Bitcoin is $139,000. So that means if you were to invest $139,000, if you wanted to get exposure to one Bitcoin by buying MicroStrategy, you would need to buy $139,000 worth of MicroStrategy stock. And as of the time of making this video, the trading price of Bitcoin is only $63,000. So MicroStrategy is trading at a 118% premium to net asset value. And MicroStrategy, the company, is taking advantage of their high share price by issuing more shares, which they will use to buy more Bitcoin. So on August 1st, MicroStrategy filed paperwork to sell up to $2 billion worth of common stock at the money offering. Now, this from MicroStrategy's perspective, this makes perfect sense. This is a smart move because they trade at a premium. They get to sell their overvalued stock to buy more Bitcoin. But you have to, if you are a shareholder of MicroStrategy, you have to be aware that they're going to be issuing more stock, which will dilute your ownership of the company, increase the number of shares outstanding, and over the long run, as the company issues more and more stock, that could, that new supply of stock hitting the market could eventually put downward pressure on the share price. So MicroStrategy has been a huge success for its CEO, Michael Saylor. So prior to them getting into Bitcoin, it was a very small software company. I think Michael Saylor was already a rich man, but he's probably only worth, a couple $100 million. Now that the value of MicroStrategy stock has surged so much, purely as a result of them getting into Bitcoin and their stock trading at such a huge premium, Michael Saylor's net worth is now about $4.1 billion. So he is an incredibly wealthy man. It's perhaps unsurprising that given the massive amount of wealth that Michael Saylor has accumulated for himself, other entrepreneurs are looking at him and saying, oh, maybe I should do that too. And over the past few months, we've seen a couple of copycats, a couple of companies that are becoming copycats, trying to basically recreate what MicroStrategy did. And there's two companies in particular that we're going to talk about. There's an American company called Semler Scientific and a Japanese company called MetaPlanet, which are both following the MicroStrategy playbook and have recently started buying Bitcoin to hold on their balance sheets. So we'll look at these two companies one by one. So firstly is MetaPlanet. It is a microcap stock trading in Japan. And interestingly, if you look at the 5-year chart, the company had not been doing particularly well. The stock price had been declining significantly over the past few years. But then they announced that they're going to become a Bitcoin company and they're going to start accumulating Bitcoin, and the share price surged. So prior to becoming a Bitcoin company, it appears that MetaPlanet's main business was real estate. They own one hotel in Tokyo called the Hotel Royal Oak Gotanda. And if we look at their financial statements, in the first half of 2024, their hotel in Tokyo generated 168 million yen of revenue and reported an operating loss of 116 million yen. And it's the current exchange rate is about 144 yen to the dollar. So if we convert those into US dollars, the revenue in the first half of the year was about $1.2 million, and they lost $800,000. But then they changed their focus to becoming a Bitcoin company. And over the past few months, they raised 1.3 billion yen by issuing common stock. And then they issued a $1 billion bond that's maturing on June of 2025. And then later they issued another $1 billion bond, which is expiring in February of 2025. So these are both relatively short term in duration. And interestingly, this second bond was sold to a company called MMXX Ventures Limited, which is also a shareholder in Metaplanet. So a shareholder in Metaplanet is lending money to Metaplanet, allowing Metaplanet to buy Bitcoin. Now, altogether, they raised about 3.3 billion yen through their issuance of bonds and stock. And then they also had a little bit of yen on their balance sheet to begin with. So they were able to spend 3.45 billion yen, and they acquired 360 Bitcoins. If you look at the current market capitalization of Metaplanet, their current market cap is about 27 billion yen, which is equivalent to about 190 million US dollars. The value of their 360 Bitcoins is about $23 million. They also have that hotel that generates about $2-ish million per year. So I don't know how much that hotel is worth. Even if we say that hotel is worth, 10 times of its revenue, which is extremely generous, then it's probably worth about maybe another $25 million at most for that hotel, although that's extremely generous. And so at most, their assets are probably worth around $50 million. So this is, trading at a massive premium to net asset value. It's very overvalued if you look at it from that perspective. Now, to my knowledge, there are no Bitcoin ETFs approved to trade in Japan. So possibly this Metaplanet stock is fulfilling the same use case that MicroStrategy fulfilled prior to the launch of Bitcoin ETFs in the US, where maybe investors in Japan would purchase shares of Metaplanet to gain exposure to Bitcoin indirectly. And that could explain the premium to NAV. But it's also important to note that this company only has a market cap of less than $200 million. So it is a micro cap stock. And therefore, it's unclear, how much demand there actually is for this type, how much demand there actually is from investors, because not that many people actually own this stock because it's still micro cap. Now let's look at the other MicroStrategy wannabe, which is a company called Semler Scientific. Now, this is an American company listed on the NASDAQ. So this company, it's a medical device company. And on May 28th, they announced their Bitcoin strategy, and they announced that they would be buying Bitcoin. And initially, the share price indeed surged on the news of them transitioning to being a Bitcoin company. However, it's given up most of those gains, and the share price again looks to be on a downward trajectory. So Semler Scientific thus far has not really had that much success in their transition to a Bitcoin company. And if we look at their financial results, their revenue has been declining and their profits have been declining. So Semler Scientific, their core medical device business, has been declining recently. And maybe, hypothetically, this could be, if we just speculate a bit, this could be the rationale of why they wanted to become a Bitcoin company. The core business is not doing well, so we need to pivot to something else to maybe help the stock price. And what they decided to do was to start buying Bitcoin. That's how they're going to try to turn things around and maybe distract from the deterioration of their core medical device business. By August 5th of 2024, they had spent roughly $63 million to acquire 929 Bitcoins. And that was most of the money, that's most of the cash on their balance sheet. So they basically just took the cash they already had on their balance sheet and spent almost all of it to buy 929 Bitcoins. So now they're pretty much out of cash. So then they released they released a prospectus saying that they intend to sell up to $50 million worth of stock, as well as up to $100 million worth of debt. So they're planning to raise up to $150 million of new capital in total in order to buy more Bitcoin, presumably. However, the strategy of issuing new shares to buy Bitcoin, this strategy only really works if your stock is very overvalued and trading at a large premium to net asset value. But in the case of Semler Scientific, their share price has actually been declining recently, and they're not trading at a massive premium. Therefore, it's unclear if their Bitcoin strategy is actually going to work. So as we see, Semler Scientific was trying to be a copycat, basically, and recreate MicroStrategy's success. However, the big difference between Semler Scientific and MicroStrategy is that MicroStrategy is run by Michael Saylor, who is very famous among the crypto community. He has millions of he has millions of followers on Twitter and makes frequent appearances on cable TV, like on CNBC and such, where he talks about Bitcoin. Because of Michael Saylor's massive presence on media and social media, a lot of people know about him and want to invest alongside him. And that potentially could explain the massive premium to NAV that MicroStrategy stock currently trades at. Semler Scientific, on the other hand, is a boring company. They do not have a famous CEO with a lot of fame on social media. Therefore, no one really knows them. And they tried to do a similar strategy as MicroStrategy, but it looks like it's failing. So our conclusion is that the success of MicroStrategy stock over the past few years is not really having to do with the fundamentals of what they're doing. Instead, it's really just the hype and larger-than-life persona of Michael Saylor as a person that has really been able to gain hype for his stock. All right, I think that wraps it up for everything we had to talk about in today's video. As always, if you have any comments, please, or if you have any opinions or thoughts on MicroStrategy or Bitcoin or whatever, please let us know in the comment section below, and we will see you all on next week's video.